Hello YouTubers, welcome to this channel once again. And remember to hit the subscribe icon if you haven't, so you get notified when I release more videos teaching you how to trade in the forex market. So in today's discussion, we'll be looking at some reversal patterns. Now, if you've been following this channel, you notice we talked about some other patterns in our previous videos, which were basically continuation patterns. We talked about the ascending triangle, we talked about the descending triangle, the asymmetric triangles as well. Those are patterns that indicate that a trend would continue. So now we'll be looking at some patterns that indicate trend reversals. So, but for the sake of time, we can't look at all of it today. So we'll look at just two of these patterns, which adopt the head and shoulder pattern and the inverted head and shoulder pattern. So let's talk about the head and shoulder patterns. I'm going to run through this illustration and I'm going to show you what it looks like on a live chart. So quickly, the head and shoulder pattern is found in an uptrend. It indicates the end of that uptrend, or perhaps I might not use that word, an end. It shows that sellers are now coming to the market and you're going to have a bearish run. You're going to have a bearish run. You're going to have a seller's market. So let me explain to you how this forms and how you can trade with this pattern. So in an uptrend, price is going up. You can see this price is going up, and then price comes all the way here and meets this first resistance, which in this formation serves as the left shoulder. So it forms this high on this resistance, and then price reverses directions and goes downward until it finds this support. And what happens as soon as this support is found and it's respected, the left shoulder is confirmed. So this left shoulder has been formed. So price then bounces off from this support zone, going upward to a resistance that is higher than this previous high. And that makes this previous high is now the head in this formation. So if you look at the mirror, you also see yourself the head and then the shoulders. So that's why this is also called a head and shoulder pattern. So you see, so this has become the head because price has come to this zone and respected this zone. Now price reverses further and goes all the way down to the same support and then respects the support. So once this happens and this zone has been respected and it goes up, so we have a confirmed head. We also have a confirmed left shoulder. So price then bounces off this support zone and price goes all the way up until it hits a third resistance zone, and which now becomes our right shoulder. And what happens? Price quickly reverses direction, going downwards. Price goes downward. Now, remember, if you look into the mirror, you see your head, shoulder, and just on the line, we have what we call the neck line. So this is our neck line. This is the neckline. So once price breaks through, the pattern has been completed. Once price breaks through this touch on this touch of this support, once price breaks through, the pattern has been completed. I'm going to show you how to trade, how to enter, or now also how to set your take profit and your stop loss. Now how to identify this neckline, you simply just draw your support zone. Now draw your support zone to touch these support zones and you have yourself a neckline. It might not be equal. It's okay if it's not equal. It's okay if they are not, if this is a bit higher than it, if this is a bit lower, you can just use your trend line and connect it. It mustn't be a horizontal line. So it's okay if that happens. And it's also very important to also mention, even the shoulders, these shoulders, they must not be at the same height. Possibly this shoulder might be formed here and this might be down here, or this might be up here and this might be down here. So it's okay if the shoulders are not of the same height. It's okay. So usually the volume usually decreases as the pattern is being formed. It decreases if you see a less pattern, a less volume in this pattern. or when it breaks out and retests this neckline, you see in an increase in the volume. See an increase in the volume. So how do you trade this pattern? How do you trade this pattern? Basically, some people will say they prefer a sniper entry. They want to get in at the perfect time with little drawdown. Well, I always say it's better to get a safe entry than getting a sniper entry. Now, it's a sniper. If someone that wants to do a sniper entry, we come and enter at this point. Enter at this point when the right shoulder has been formed, enters and hopes to ride it through even during the retest of the neckline and then go down. But hey, here's what I will advise. I'll tell you to get a safe entry. Get a safe entry, because this left shoulder is not even confirmed until price breaks through the neckline. That is when you confirm that you have a head and shoulder pattern. Because there are times where price do a fake out. If you look at the Great Britain pounds against the US dollar, today is 7th of 6th, 2020. If you look at what happened on the chart on the 5th day of this month, June 2020, you see Great Britain pounds against the US dollar did a fake head and shoulder. It formed this, and then it formed this, and it didn't break through the neckline. And what happened? Price shot up, price went all the way up. So it's better to have a safe entry. It's better to wait for the neckline to be broken, and then you have a confirmed head and shoulder pattern. So how do I advise you to trade this? How do I advise you to get a safe entry? Simple. You wait for price to break. Patience, remember. Wait for price to break through this neckline, break through, do a retest of the broken supports, and go all the way down. Once you've seen a breakthrough of this neckline, you're sure the pattern is completed, and you're sure price is headed downwards. So, but remember, nothing is certain. Advice is set your stop loss. How do you set your stop loss? You can set your stop loss above the broken neckline, or to be safe, set it at just right on the right shoulder of this pattern. So once you do that, you should be safe. And how do you also set your take profits? You can do a measured move. Measure the heights from the head to the support zone. Now they use the same pip count. If the difference between this price range and this price is 60 pips, and when you enter, set 60 pips as your take profit, and you should be fine. It is definitely going to hit your take profit. So guys, that's the head and shoulder pattern. So I'll quickly go on to show you on the live chart what it looks like. So for the head and shoulder pattern, we're going to be doing an illustration on this chart, the euro against the Great Britain pounds. This is on the 4 hours time frame. So this is today's Sunday. The market is not open, but this is live chat, because I'm sure on Monday or Tuesday this is going to play out. So I'll quickly show you what we've been talking about. So as the market was coming from an uptrend, it finds this resistance zone, which then the market bounces back down this zone, and then this completed the left shoulder. Let's insert a shape so we'll then see that better. So see, this is our left shoulder, then price bounces back to that zone which serves as support, which is the neckline. So I'm going to mark that out right now. So you can see this as the neckline. You can see price comes all the way, bounces, and we have a confirmed left shoulder, and then price goes up to form its head, forms the head. And let me mark that up nicely. So we have this head, and then price comes down, hits this support zone, goes up, forms our right shoulder. So we mark that up nicely. So we have a firm right shoulder here. So we're expecting price has come back again, respected zone, gone up. I'm expecting a breakout of this zone and a retest to go short, to sell euro against the Great Britain pounds once the market breaks through that zone. So guys, this is always as good as a live chat. I just shared a market setup which you should look out for when the market opens on Monday. This might happen Monday or Tuesday, so watch out for the euro against the Great Britain pounds sell opportunity coming up. If it doesn't break out, do not force it, do not sell. Wait until you see a breakout and you sell. So guys, that's it for this. A live illustration of what the head and shoulder pattern looks like. I used the euro against the Great Britain pounds to explain. So when market opens, look for opportunities to sell euro against the Great Britain pounds. Wait for confirmation. Wait for a confirmation to happen. So that's it for the head and shoulder pattern. So quickly, I'm going to be continuing with the discussion. And let's talk about the inverted head and shoulder. It's pretty much the same thing with the head and shoulder, but in this case, it's about the other way around. In this case, it's about the other way. If you understand the head and shoulder pattern I just explained right now, you're definitely going to understand the inverted head and shoulder. So the inverted head and shoulder is found in a downtrend. When price has been going down, it signifies that a bull's run is coming. It signifies that there's about to be a potential change in direction. Market is about to start going up. Market is about to start going up. So let me explain now. So great. So price is coming down. Price comes down, 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 and then price hits this zone, hits this resistance, and then price bounces back up and hits. No, sorry, it's here. It supports. Sorry about that. Support bounces, goes up, or finds a resistance, which is now which we eventually serve as the neckline. Bounces off and comes down. So we have our left shoulder complete. The price goes all the way down, breaks through this support zone, forms a head, which is lower than the left shoulder. Then price goes back down to that same support zone and bounces back off. So we have a confirmed head. Then price comes up, forms the right shoulder when it respects that same zone of the previous left shoulder, and goes down to the neckline. And then we have a confirmed right shoulder. Now what happens? Price goes all the way and breaks through this zone. Remember what I've always said, when price tests somewhere more than 3 to 4 times, it's most likely going to break out through that zone. So the price breaks out through the zone. Remember, safe entry. Do not buy until this breakout happens. Price breaks out, does a retest, and you're sure, boom, price is going to continue going up. Just the same way I said in the previous head and shoulder pattern, the same thing is applicable. Now the left shoulder and the right shoulder must not be the same height. This might be up, this might be down, but remember, they shouldn't get to the same size, the same zone as the head, but they must not be at the same size. They mustn't be the same size. This might be up, while this might be a bit down here. This might be up, this might be a bit down here. So that's basically that's it. Remember, get in after the breakouts and wait for a retest. If you see a very aggressive push, you can go in, because at times price doesn't come back for a retest. So it's good to wait, be conservative, wait, patience is key. So, and always remember to set your stop loss, set it below the broken resistance zone, or set it at the right shoulder. It's at the right shoulder, and you'll be safe. So remember, for your take profit, you can use a measured move. You can measure the difference between this zone, this head, and this on the neckline. The pip counts, not the pip count. We have is a 70 pip movement, a 50 pip movement. Use that as your take profit, and be sure it's going to be a hit. All right, so for the inverted head and shoulder pattern, I spotted this setup on the 15-minute time frame. Same euro against the Great Britain pound. This happened last week. Although it wasn't a perfect setup, but it did play out. So I'm going to try to use it to give an illustration. So you see price was coming all the way from coming down, and then finds this zone which serves as the left shoulder. Mark it up for you. Left shoulder. You have the left shoulder here. at the left shoulder, and then price bounces up on this zone, which will then serve as the neckline. So let me mark the neckline out for you again. Neckline resistance, you can see the resistance. So price goes all the way up and then bounces back off, and then we have a head here. So insert again. Now we had a head here, and then what happens afterwards? Price goes all the way up, hits the zone. Almost, remember I said it mustn't be, the size mustn't be equal. It mustn't be equal. The same thing with the shoulders, mustn't be equal. You can see this is a bit higher than this. And then now, so we have the right shoulder here. So let me mark that out for you. Great. So here we had the right shoulder here. So what happens afterwards? Price went back up and had some difficulty breaking through the neckline, came all the way down again, still to the right shoulder. And then eventually the price broke out with these candles and did a small retesting, not small, this is a major retesting. So if you had your stop loss below the broken support, it would have been taken out. So that's why, but it's safe when you have it on your right shoulder. So if your stop loss was here, it was at that point where you entered your buy. If your stop loss was below the broken resistance, it should have been taken out. But if it was lined up with the right shoulder around here, you would have been safe. So we'll see what happened afterwards. Price went all the way up, and then boom, you'd have gotten your take profit hit if you use the measured move. If you measure from here to the neckline and use that as the same TP, that would have been hit. So guys, that's it for the inverted head and shoulder. So I believe you've been able to get some value for this video. If you have, kindly hit the thumbs button, like the video. If you've not subscribed, subscribe, and be sure you're confirmed I'm going to release another video on some other continuation patterns. I'm going to do another video to explain so not continuation, rather some reversal patterns. We'll do that shortly. Thank you very much, guys, and remember to stay safe and be good.